Just after your directional bias has been established in the market, it is compulsory and mandatory that you know areas to enter your buy or your sell position, and that is what I'm going to be discussing today. So join me while we get it started. Don't forget to like, share, and subscribe to the YouTube channel. See you in class.
So, can everyone see my screen, please? Can everyone see my screen? Please, if you can see my screen, just drop a message in the chat box so that I can be rest assured that you guys can see my screen. Please drop a message in the chat box, please, if you can see my screen. Okay, yes, we can see. All right, good. All right, so let me turn off my camera, please. I don't like to see myself when educating people about forex trading. It tends to like I'm not cool with that. So let me just turn off my camera so that let me minimize the chat box. Okay, beautiful. So I'm not seeing anybody at the moment. So it's just me and my chats as it should be. All right. So today we are going to be discussing about area of what? Area of interest. So this is what I call AOI. AOI. AOI, which is called what? Area of interest. So this is the way in the market, all right? And this people are still joining. Okay. All right, this is the way in the market, and this is only where you take a trade after the true liquidity calling price has been induced. I repeat, this is the way in the market, and it's only where you take a trade after the true liquidity calling price has been induced. Now, for instance, let's assume that I'm making reference to this range. Let me zoom my chart now in a way that let's say this is what I'm making reference to now. I'm making reference to this structure range, this low and this high. What is a structure range? A structure range is the distance between 2 points, point A and what? Point B. I repeat, a structure range is the distance between what? 2 points, point A and what? Point B. So let's assume this is point A and this is point B. Now, let's assume we want to take a trade and let's say this is the liquidity calling price. This is the liquidity calling price. Now, let's say market induces this liquidity now, in the sense that market has taken out this liquidity. Where do you enter your buy from, or where do you enter your sell from in a bearish scenario? That is the work of AOI. Meaning that if you have this zone, this high and this low and this high here, this is A, this is B, structure range, right? And now price has induced the liquidity calling price, which is this area. Where do you join the buy from? How would you know that this is the zone where you should take your buy from? How would you know? So that is what we are going to discuss about, which is the where in the market. That is the job of AOI. It helps you to detect the where in the forex markets. Now, our expectation on chart is that market should create higher highs and higher lows. This is the normal expectation on charts. For a bullish scenario, market creates higher highs and higher lows. Higher lows. This is higher high, and this is higher lows. Now, for a bearish scenario, the expectation is that market should create lower lows and lower highs. This is the expectation on charts. Just our basic simple market structure, right? Good. Whereby this is what? The lower highs. And this is what? Lower low. Okay? This section here is lower high. And this section here is lower low. So this is for a bullish scenario, while this is for a what? A bearish scenario. Now, let's now assume price now does something like this for a bullish scenario, whereby price clears the high, clears the low, and continued in that bullish movement. Okay? Price cleared this previous high, price cleared the previous low, and price continued the bullish movement. Okay? This sell move here is what we call what? The AOI. Why is it called the AOI? Because it is the abnormalous behavior in what? In price action. The expectation is that price should create higher highs and higher lows, whereby every support level is being complemented by what? The resistance level. Okay, I hope you know that support and resistance is what forms the basics of what? Your higher highs and what? Your higher lows. Okay, now this area here, this sell move here that cleared the high, you see market cleared the high, cleared the low, and continued the initial direction, which is the bullish what? The bullish direction. This structure here is what we call what? AOI. This is for a bullish scenario. Why for a bearish scenario? A situation whereby market is meant to create lower lows and lower highs, and then this clear the low, clear the high, and continue the what? In the bearish movement. This buy move here is what we call what? Is what we call an AOI. Okay, this is what we call what? An AOI. Now, this is for a bullish scenario, and this is for a what? For a bearish scenario. So take note that for a bullish scenario, it is compulsory or it is mandatory that price creates a what? A high or a what? A higher high. It is mandatory. If price doesn't create a higher high, then that won't be referred as what? As a true AOI, which is called what? Area of interest. While for a bearish scenario, it is mandatory that price must create a what? A lower low. For that area to be concluded as a what? As an AOI. Is that clear? Now let's proceed further.
I do.
Please mute your mic. Just mute your mic, please. Just mute your mic, please. So I'm going to be discussing further about the rules of what? The rules of AOI. The rules of AOI. Rules of AOI. Now we have about 3 rules of AOI, but I'm going to be discussing about just 2 rules. Yeah, for the public, I'll just discuss about 2 rules that I feel are very, very important. Or rather, let me say 1 rule. We have two types of rules, but I'll discuss about just one. Maybe later on, as we progress with the community, I'll tend to dish out some more rules that will be beneficial to you guys. All right. So the first rule I'm going to discuss about now is what I call the convergence rule. This is what I call the what? The convergence rule. Now, under this convergence rule, it can be broken down into, more people are still joining. Okay. It can be broken down into 3 categories. It can be broken down into what? Into 3 categories. So the first category is what we call the inverse convergence. Inverse convergence. The second one is what I call the full convergence. And the third one is what I call the partial convergence. I hope you guys are following. I'm trying to be as slow as possible so that you can understand what I'm talking about. Okay? So take notes, this is the psychology behind the formation of an AOI. The most important way of learning trading, or if you want to really understand trading very well, focus on understanding the psychology behind that topic. That's what makes you different from another person. Or rather, that's what makes you a different trader, okay? Don't just frown. Try to understand why is this like this. If you say this is like this, then tell me why it is like that. Okay. Now note, this is the psychology behind what? The formation of what? An AOI. For a bullish scenario and what? For a bearish scenario. This is a structural formation of it. And note that every candle is a structure range in the market, and every structure range is a what? Is a candle in the market. What am I trying to say? If I'm making reference to this range now, let's say from higher high, higher low, higher high, higher low, higher high. This is what we call what structure range. This is a 1 hour time frame. In weekly time frame, this might just present itself as maybe one candle, or in monthly time frame, it can present itself as what? As one candle. So that's what that statement is trying to say. So I just had to just digress a little to just try to explain some things for you guys. So let's go back to our rules. We have the inverse convergence, we have the full convergence, and we have the what? And we have the partial convergence. So we're going to discuss about each of these convergence rule, one after the other. So let's start with the first one, which is inverse convergence rule. Inverse convergence rule. All right. Now, for inverse convergence rule, this is a situation whereby we have two AOIs. We have the smaller AOI and we have the what? The bigger AOI. So this is a smaller AOI. Then let's say we now have something like this. All right, beautiful. Let's say we have something like this now. All right, yeah. Let me stop here. People are still joining. Okay. So now I said inverse convergence is a situation whereby we have two AOI. We have the smaller AOI and we have the what? The bigger AOI. Look at this guy here. This guy has that formation of the AOI. It cleared the high, it cleared the low, and it continued in the what? In the bullish direction. So it means that this sell move here is what? An AOI. Look at this structure range here now. This guy also cleared all these high, cleared all these lows, and created a what? A new high. Remember, I said that it is mandatory that it creates a what? A new high. Now, this is AOI 1. Why this area here is what? Is AOI 2. So let me call this AOI 1. Trying to be as slow as possible so you guys can perfectly understand it. And this is what? AOI 2. Now, can you see that AOI 1, AOI 2 is much more bigger than what? AOI 1. It means that the true AOI lies in where? Lies in AOI 1. So this is the true area of interest. So if you are looking to buy, this is the right place to what? To buy from. A situation whereby you have two AOI. The first one, which is the smaller one, and we have the second one, which is the what? The bigger one. The true AOI lies in the what? In the smaller one. Okay? So it is possible that price can use this first area or this second or the bigger AOI to what? To engineer liquidity. But most definitely, price will still come back to where? To the smaller AOI and what? Continue the what? The bullish movement to the what? To the upside. So it means that your true imbalance lies in the what? In AOI 1. What is imbalance? Imbalance is trying to tell you the inefficiency in what? In price action. telling you that that particular buy movement is not done, or that particular sell movement is not done. And how do we identify imbalance? A situation whereby your support level is not being complemented by your resistance level, or when your resistance level is not being complemented by what? Your support level. For example, this area here is a what? This is a resistance. And this area here is a what? Is a support. So it means that even though this guy here is a resistance level, the true imbalance is at this zone. So definitely price will still come back to mitigate this area, and then we can have the continuation to the what? To the buy side. Okay, so this is the first what? This is the first rule, which is the inverse convergence rule. So when you are watching the video again, try to draw out the skeletal drawing so that you can perfectly understand what I am doing here. And then when you are studying your charts, you can perfectly understand things very, very, very well. Okay, so let's proceed further to the next rule. And what is the next rule? The next rule is the convergence rule. Convergence rule. So what is the convergence rule? So this is just a situation when we have, just like the inverse convergence rule, we have two AOI. But this time around, the first AOI we're going to have is the bigger AOI. It's going to be the bigger AOI. And let's say we'll now have something like this, whereby, let's say this clear the high, clear the low, and then continue. So let's say we have something like this now. Now look at this. This is AOI 1. Price clear the high.
1 sec.
Price
Didn't catch that.
cleared the low, and price created the what? A new high. This is the first AOI. Let me highlight it. This area here is the first AOI. This guy here is the second AOI. Why is it the second AOI? The same thing. It cleared the high, cleared the low, and what happened? It created a new high. So this is what? AOI 1. This section here is what? AOI 2. So where is our true AOI, or where is the true imbalance in the market? This guy, not the bigger one. Okay, so it's possible price can use the first one to engineer liquidity, but definitely price will still come back to this, and then we can continue the bias to the upside. Why? Because still at this level, we still have a valid imbalance that is not yet mitigated. So even this is a resistance, and let's say this support level tapped it, we still have a much more refined resistance level inside. So which tells us that we still have imbalance within this guy and this guy, telling us that this buy move is not done. Price will still come back for mitigation, and then a continuation to the upside. Then in that situation, we can say that we have gotten what we call a money transfer, all right, from all this level to this level. So this guy is now properly mitigated. Okay, so this is the second rule of AOI. Then the third rule of the convergence AOI is the partial convergence. Now, what is the partial convergence? Now, let's say price is creating higher highs and higher lows like this. Higher highs, higher low. And then we now have something like this. Let's say price is continuing its bullish order flow. Probably price is heading somewhere, and then we have something like this. Maybe a reversal. This is what? An AOI. I want to believe everybody know why this is an AOI. Clear the high, clear the low, continue the bullish movement. This is also what? An AOI. Clear the high, clear the low, continue the bullish movement. And now probably price got to a resistant level or a supply that is capable of what? Causing price to what? To reverse to the downside. Let's assume. Now, good. Now, you agree with me that this is AUI1. This is AUI1. And this is AUI2. AUI1 or AUI2 properly mitigated AUI1 before price got to this area. So it means that all power belonging to AUI1 was transferred to AUI2. So in that situation, they are one. They become what? One. Okay? Good. Now, it means that if you want to sell, let's say price wants to reverse to the upside, you want to sell now. In that situation, you don't expect price to tap AUI2. Why? Because money has been transferred from AUI1 to what? AUI2. So in that situation, price need not to tap what? AUI2. So we can expect price to just what? Pull up. And then you can take your sell, bring out your short position without even putting your stop loss at this level. So this partial convergence helps you in understanding refinement much more better. So you can just put your stop loss at this level, knowing fully well that price touching this guy is an invalidation to the trade. So you can just sell confidently to the downside. Now, note that what I am teaching you has to do with what? The way in the market. This is not how you establish a bias in the market. So that you will not go to the chart and you just start marking out different AOIs and you want to start buying from different levels. You get it all wrong. Note that this can be found at every time frame in the market or at every structure range that you want to work with. You can find AOI formation formed there. What matters is you establishing your bias first before doing anything. And how do you establish your bias? That has to do with what? The why in trading. We have the why in trading, we have the where in trading, we have the when in trading. Okay, so what I'm just teaching you now is just where in trading. Where, not how you establish a bias. Okay, so this is what? The partial what? Partial convergence rule, whereby price need not to tap this area. Now let's go to the charts and let us try to identify all that we have been discussing about lately. So yeah. Okay, so let me zoom out my charts. Let me look for an example for you guys. Okay, I think I have one here. Okay, let me delete this. Let me show you very well now. So I am making reference to this structure range from this low to this high. Take note, I'm making reference to this structure range from this low to this what? To this high. When we started the lecture, I said that a structure range is the what? Is the distance between 2 points. You can call it point A or point B or any other alphabet you want to relate it with. Okay? Now, look at this. Let me zoom in. Let me zoom in now. Now, look at all these guys. Price was creating higher highs and higher lows, right? Good. Now, look at this. From here, price did what? Sorry, let me zoom out my charts very well. Yes. Now, look at this guy. Price cleared the high. Price cleared the high of this. I'm trying to admit some persons trying to join. Price cleared the high, cleared the low, and continued the bullish what? In the bullish movement, right? Telling you that this has the characteristics of what? An AOI. So this is AOI 1. Look at this guy here. Same thing happened here. What did price do here? Price cleared the high of this. Price cleared the low of all these guys here. And price created the what? A new high. This guy is what? AOI 1. This guy here is what? AOI 2. Now, AOI 1 or AOI 2 properly mitigated AOI 1. So in that situation, if price wants to sell, price need not to tap AOI what? AOI 2. And did you see that price never tapped AOI 2? I took this sell It was a very beautiful sell on Euro USD. Okay, you see that price never tapped what? AOI2. So this is what? An example of what? Of your partial convergence. This is what? An example of what? Your what? Your partial convergence what? Your partial convergence rule. Whereby price need not to tap what? AOI what? AOI2. As easy as that. Okay, so let me show you much more examples. Let me go to 4-hour time frame. Okay, look at this guy. Let me make reference to this. Take notes. Where? That's what I'm talking about. Where? Nothing else. Just where. Price cleared the high of this. Price cleared all these lows, and price created a what? A new high. Look at. It means that the sell move is what? An AOI. Did you see that was where price used to continue this buy order flow on Euro USD? So let's assume this is the liquidity calling price. Definitely it should be a liquidity. All right, this should be a liquidity. Maybe much later as we progress, I'll show you how I pick my liquidity on charts. Okay, so this is definitely should be a liquidity, or maybe this low here. All right, so let's assume this was a liquidity calling price. Now I want to join the buy. What do? I'll just look for my AOI around here with what I've taught you guys. Okay, price clear the high, clear the low, and continue the what in the bullish movement. Boom, that's all. And you see that price bought from what? From this area. Let's look for more examples. Which area again? Let me zoom out to past data. Okay. Okay. I've seen one here. Look at this guy here. All right, this should also be an AOI. Yes, this should be an AOI. Now look at this also. Oh, we have 27 persons on the call. Wow, that's a good turn up. Okay, look at this. This also has the characteristics of what? An AOI. How? How are we sure it has? Look at price cleared the low. Remember, I said every candle is a structure range and every structure range is a candle. Now, what this means is that price created a higher high, higher low, a higher high, and what? A higher low. So price did what? Cleared the high, cleared the low, and what? Created a new price, cleared the high, cleared the low, and what? Created a new high. Okay, so it means that all these are what? Even from here is the real AOI. Okay, so let me just mark everything like this. This guy here is also an AOI. So before I end the class, I'll prove to you why this is an AOI. This is what we call a special candle on charts. That is a buy candle found among sells or sell candle found among buys. I'll show you that much later. This guy mitigated this guy. Can you see? In that situation, if price wants to sell, price has no reason to tap this guy. So you can take your sell knowing fully well that price won't tap this low. And you see that price never tapped it. Never. It won't. In as much as your bias is what? Please mute your mic, please. In as much as your bias is what? Is right. Everything you do on charts will be what? Will be 100%. Everything you do on charts will be what? 100%. Please mute your mic, those that are just joining us, please. Let me show another example. Let me see if I can see another example on charts. Let me see if I can see another example on charts. People are still joining me. Wow. Okay. So let me look for more examples for you guys. Let's check. Okay, I think this is an example. Oh, beautiful. This is a very beautiful example. Look at this now. Please pay attention. If you go to a more lower time frame than this 4-hour, you will observe that this is an AOI. So it's possible that, see what price did here. Price must have what? Cleared this high here, cleared this low here, and what? Created a new high. So it means that this is an AOI. And you guys are joining rapidly. Wow, okay. Then this is also what? An AOI too. And you see, this guy tapped this guy. So in that situation, price need not to tap this low 100% before selling. And you see that price never tapped it. Go and backtest this. It happens all the time, 100% on chart. In as much as your bias is right, when you see something like this, definitely you'll be correct. So this is how we pick what? The where in the what? In the market. So let me give you some few tips or some points to note. Some very important points that will help you in understanding AOI perfectly well. Now, point number 1. AOI can be identified as a bullish candle among multiple bearish candles, or a bearish candle among multiple what? Bullish candle. I repeat, point number 1. AOI can be identified. Please don't annotate on my chart, please. AOI can be identified as a bullish candle among multiple bearish candles, or as a bearish candle formed among multiple what? Bullish candle. AOI can be identified as a bullish candle formed among multiple bearish candles, or a bearish candle formed among multiple what? Bullish candle. Okay, what is that trying to say? Let's say we have something like this. Candle 1, candle 2, candle 3, and let's say we have candle 4. And let's say this candle is the odd one out. Let's say maybe this is a bullish candle, or maybe a bearish candle. It means that the true AOI is this. That's what that statement is trying to say. So it means that this is a candlestick formation, while the structural formation is when you see something like this on charts, whereby price will clear the low, clear the high, and create a new low. So this is the same as this, whereby the buy move is this guy. All right. So if I go to the chart to show that, the meeting will end in less than 1 minute. So when it ends, I will share my link again, so that I'll just conclude with you guys and then call it a day. So those that still want to join, you can stick around so that we can quickly conclude the class, and then I show you much more examples. All right. Please mute your mic. Please mute your mic. Please just mute your mic. Mute your mic, please, so we don't get distracted. Okay, so I stopped at points to note about AOI, and the first point I said that AOI can be identified as bullish candle formed among multiple bearish candle, or bearish candle formed among multiple bullish candle. And I gave an example here. Let me see if it's still on chart. Okay, it's not here. I said where we have something like this. Let's say we have candle 1. Let's say we have candle 2 and candle 3. And then let's say we have candle 4. Then I said that let's assume that this guy has a different color. Maybe this is a bullish candle among bearish candle. So it means that, let's assume I want to take a sell. It means that this is the true AOI that I'm going to use. So that's what that first point is trying to tell you. A situation whereby you have bullish candle formed among multiple bearish candle, or when you have bearish candle formed among multiple bullish candles. So it means that this is the AOI that we are going to use to take our sell. So this is the candlestick formation. The structural formation is something like this. Let's say price is creating lower low, lower high, lower low, lower high, price clearly low, clearly high, and continue the bearish movement. It means that this buy move is the same thing with this. So it means that all these are what bearish candle, and this is the only what bullish candle formed among it. So this is the candlestick formation, and this is the what the structural formation on charts. Okay, the candlestick formation and the structural formation. So it's the same thing. If you are looking to sell, you still take yourself from here to the what to the downside, simply because this is an what an AOI. This is not how you establish a bias. This is only where you take a trade. That's all. So let's go to the charts now. Let me wipe off all this drawing. It's becoming to making my charts dirty. So I will remove the drawings. Yeah, beautiful. So look at this guy here. Let me use this as a case study. Look at this. We have a bearish candle here. We have a bullish candle here. And we have another what? Another bearish candle. This is 4-hour time frame. Now, let me zoom in. I want to make reference to this structure range, this high and this low. This is what I want to make reference to now. This guy here, this ash candle you are seeing is my bearish candle. Okay, why this dark black is my what? Is my bullish candle. Now, can you see that this guy here is the odd candle formed among 1, 2, 3, 4, and even 5. So it means that this guy here is my what? Is my AOI. Okay, so this is what that first statement is trying to say, where you have an odd candle formed among multiple what? Candles. Okay, so this guy is my what? Is my AOI. In as much as I have established that price is going to what? Sell from that area, either as a pullback or maybe as what? A reversal. Now, let me go to a lower time frame. Let's say I go to 15 minutes time frame. Let me zoom out now. I am zooming out my charts. Yeah. I'm zooming out my charts. Now, can you see that this guy here was what price used to what? To take a sell all the way to this area. Okay, and price moved. I took this, I think, I don't know, since I took this sell. So this was like about, okay, yeah, this was like about 100 pips on Euro USD. A very beautiful trade on EU. Okay, this was like 100 pips on EU. You see that price sold from that what area of interest. So it was possible for you to take this sell as a what? As a pullback to what? Induce the available liquidity, probably this area. And yes, it was. The available liquidity calling price. So this was a very good trade for you to take. And from this, where is the liquidity? This high. Validating what? Your area of interest. Liquidity validate your what? Your area of interest or your zones in the markets. Now, if you look at this candle, let me zoom in. That candle in 4-hour time frame that we saw, can you see that this guy has the characteristics of an AOI? This is a very beautiful class that you guys are going through right now. Price cleared the high, price cleared the low, and continue the bullish movement, right? So it means that all these areas are what? Area of interest. Now, can you see that in 15 minutes time frame, it presented itself as our what? Our normal structural candle, structural AOI formation, whereby we have something like this. Can you remember when I started the class, I said that this is the psychology behind what? An AOI, whereby price cleared the high, cleared the low, and it is mandatory it continues in that bullish movement. That is exactly what happened here. Clear the high, clear the low, and continued. In 15 minutes time frame, we have this. If I go to 4-hour time frame now, we have something different. Why? Because 15 minutes is a what? Is a substructure. It's a substructure of what? 4-hour time frame. Meaning that 4-hour time frame is a much more bigger time frame than what? 15 minutes. So inside that 4-hour candle, you are going to have multiple 15 minutes candle. That's what that statement is trying to say. So you see that in 4-hour time frame, it presented itself as what? Just a single odd candle found among the previous candle. So this is what point 1 is trying to tell you, as beautiful as that. And that was what caused this 100 pip sell on Euro what? On Euro USD. Point 2, AOY is what forms the true imbalance in the market. And I believe when we discussed about the different convergence rule, where I said the smaller one is the what? Is the true AOI. Okay, that's what forms the true imbalance in the market. You see that for every statement I'm telling you guys, I'm always giving you a reason behind it and a fact behind it, so that you understand that for everything that has to do with forex trading, there's always a psychology behind it. It depends on how well you know what you know. That is just it. So you prove to us that you know what you are saying. Okay, so that is what that second statement is trying to say. That AOI is what forms the true imbalance in the markets. Okay. Then the third statement says that an AOI that breaks structure is the true AOI, or is the right way to pick what? AOI. An AOI that breaks structure or a particular key level in the market. For example, using this as a case study, this high and this low, you will see that this was the structure that led to this BOS here. Can you see? That was the structure that led to this BOS. So it means that this is what? The right AOI. So that's a very important nugget for you to take note of. An AOI that breaks structure is a very valid way of picking what? Picking AOI. Look at this buy that happened on Euro USD. Let me clear my chart. This was the guy, this base here, all right? This guy here was what led price to break this high. Okay, so it means that this is the what? The right AOI that price was supposed to use for a continuation of what? Buys to the what? To the upside. As easy as that. Can you see? So yeah, I want to believe that I have given you guys a very important nugget on charts, and I want to believe that you have learned a whole lot from this live session, our first public live session. Yeah, so this is all about AOI for now. So as we progress with the community, I'll tend to drop much more nuggets about AOI and about how much more you can make a whole lot of things simpler for you. But basically, it's one step at a time. Okay, we don't rush the process. One step at a time. So the video will be readily available for you guys. Okay, do well to study, do well to backtest, do well to checkmate everything, live trade, forward tests, and see all this happen live. Okay, don't be scared of anything, maybe losing money or stuff like that. Okay, so you must front test to learn something perfectly raw. And notice that market is still the greatest teacher on charts. You only learn when you front test. Yeah, it's good to back test, but then you need to also live execute so that you can see things happen yourself and then you learn from it. So subsequently, we're going to be having classes like this, live sessions like this, maybe twice in a month or maybe 3 times in a month. I don't know. I'll work around that and I'll let you guys know how we are going to be doing it. And also I'll be dropping my charts also, learn from it. I'll also be dropping chart markups and all that so that you can also make money from the community. Okay, so do well to share the link with your friends, your colleagues, and everyone that's forex enthusiasts so that they can learn the right way of trading. So what we just discussed about today is simply called AOI, which has to do with the where in the market. Remember, I said we have about 3 forms of trading. We have the why in trading, we have the where in trading, we have the when in trading. So what I just showed you now is just some parts of what the where in trading. So stick around, and yeah, that's all for now, guys. Take care and have a lovely night rest. I will drop the recording to the group. Good luck and good trading.